We take a look at some more movers on Wall Street. Diane King Hall, host of Morning Movers, is with us. And we are looking here at CoreWeave. I did see at least one firm taking a stake, but what's the big picture here?
Yeah, you got a couple catalysts moving shares higher today, and CoreWeave needed a new win. I mean, look, it's been an outperformer year to date, given it coming to the public market. It had pulled back recently amid that lockup period expiring where early investors could sell shares, and you certainly saw some of that. But now today we've got analyst activity around an HC, a Wainwright, moving off the sidelines from neutral to becoming bullish on this, essentially to becoming constructive. They've now got a buy rating. They've got a $180 price target. So that certainly signals some upside from here, given that it's come down from that high flying level that we saw, the record that it hit back in June at more than $180 a share. Whereas, now it's with today's move, it's trading above $93 a share. HC Wainwright, the valuation call here is they've noticed that sharp pullback has essentially created a buying opportunity here. You also have news around it, as you mentioned, Nicole, of Jane Street disclosing a bigger stake in CoreWeave. That stake worth about $1.8 billion if we go by the close of trading yesterday. It's a quant trading firm. They now own nearly 20 million shares. So they're now among the largest institutional holders in CoreWeave. We know, obviously, NVIDIA is a big heavyweight in that group, along with FMR and Magnetar Financial. You'll recall CoreWeave had priced its IPO at $40 back in March. It climbed to a high in June of 183 before it's cooled following both its quarterly report and also that expiration of the lockup period. That expiration lockup period, August 14th, a week ago. So that freed up more than 80% of outstanding shares, Nicole.
And look, overall, cloud technology, Gen AI, these are the types of things that have been hot topics lately. I know we've had a bit of a pullback, but overall, people are still hot on this type of thing. I mean, hence Jane Street, having this stake, right?
Yeah, hot topics, high flyers. So it's no surprise to see the momentum that's been around this stock year to date. But again, given the pullback that we've seen recently, HC Wainwright saying now is the time to get back in.
All right, let's check out Hewlett-Packard Enterprises. Some positive comments from Morgan Stanley, right?
Yeah, look, they are becoming more bullish on HPE today. So Morgan Stanley upgrading their view on HPE. They're upgrading it to overweight from equal weight. Overweight, essentially the equivalent of a buy rating. They've boosted their price target to $28 a share. They previously had it at 22, which it's approaching now. That stock moving more than 2% higher off the back of this. With the gain today, it essentially brings it just above the flat line year to date. On a year-over-year basis, it's performed better, but it's joining the chorus that's growing louder around analysts on the sell side becoming more bullish around HPE. You'd recently had Evercore ISI raising their price target to 28, so this matches that indication that Evercore ISI sees. Morgan Stanley seeing the same view of that in terms of where they've boosted their view from. That signals they see more than 20% upside from where they'd seen it previously. So just stronger confidence in HPE's future performance, Nicole.
Yeah, I mean, all of these names are being so innovative and growing and just getting to the next level. When we think about agentic AI, physical AI innovation, and how the HP systems accelerated by NVIDIA, Blackwell, and latest NVIDIA AI models. So that's some good news there. Let's move on to a name like Coty. Now, Coty is coming under a bit of pressure, right?
A lot of pressure right now off the back of their results. It reminds me of our conversation around Estee Lauder yesterday. So you are seeing significant pressure here. Coty reporting a wider loss. Analysts were expecting a profit here. They reported a loss of 5 cents a share. The street was looking for a profit of a penny a share. Revenue came in at $1.25 billion. That did beat expectations, but it doesn't matter because that bleeding on their balance sheet was worse than expected. They had weakness in beauty. You saw their consumer beauty segment fall 12%. That's their mass market. They talked about some challenges with mass market. Mass market, you think of things like CoverGirl, Sally Hansen, Rimmel, that all declined. Their prestige segment, that also fell, but by a smaller portion. So prestige is that higher end cosmetics. You think of like Gucci, Marc Jacobs, Kylie Cosmetics. Those are all under the Coty umbrella, and shares under heavy pressure, down double digits today. That stock down more than 20% at the moment. Year to date, extending its loss to more than 40%. Now, the stock's been under a lot of pressure. So different than Estee Lauder. Estee Lauder had, before yesterday's drop, had been an outperformer, but it shows that there's just weakness in beauty. One standout in this was actually fragrance, similar to Estee Lauder. So consumers are buying fragrance, but they're holding off on beauty. They talked about weakness in the U.S. market. They blame some in-store anti-theft measures that may be, where we see the cabinets locked up. So it turns consumers off from, they don't want to wait around for somebody to get the key and unlock and, get the whatever, the foundation, etc. So that's one of the challenges. And then they also talked about tariffs, similar to what we heard from Estee Lauder. They're expecting a $70 million gross headwind this fiscal year from tariffs, less than what Estee Lauder said, but still something significant enough that you can't ignore. And they also talked about elevated promotional activity, so having to discount to move merchandise.
I live in Manhattan. You're completely describing my life. If I want to buy Zyrtec shampoo and Tide, that can take me a full half hour.
Yeah.
Because I have to wait at each cabinet. That being said, I will say we saw some weakness in makeup and beauty and things like this. And all of these names, while some of these stocks are showing a bit of a comeback, not Coty, that's at a 4-year low. Yeah. But some of these stocks are showing a bit of an uptrend. They all noted the tariff pressure. e.l.f., Eyes, Lips, Face, Estee Lauder, Ulta Beauty, Coty. I think they're all sort of in this area where they're just not dynamic or boasting what could happen next and feeling enthusiastic. There is a sense of caution from all of them, even on the ones that have a little bit of a stock comeback.
Exactly, yeah. And then also it's clear that they needed to lean more into fragrance for both Coty and Estee Lauder. It shows that that's where the consumer is going. Not that beauty doesn't count for anything, but they have to nail what are the trends with beauty. You have so much influence from TikTok now and TikTok shops. So maybe they need to buy a brand that's on TikTok shops to, beef up what Gen Z is looking for. Now, Coty is expecting results to improve in the second half of fiscal 2025. Their growth strategy does center on fragrance, which now makes up over 60% of sales. So a bigger share of profit now. They say it's not just attracting Gen Z, but it's attracting male consumers as well. So they're doing this push at various price points on that. I do wonder if the uptick in fragrance is because of people coming back to office.
And I don't know the answer, but I will say that some of those fragrances are astronomical. I mean, we talk about, domestic luxury. Maybe you want to buy a lipstick or something. Some of these fragrances are $100, $200, $300.
Absolutely.
So, all right, just use it sparingly, folks. Okay. Yes. Diane King Hall, thank you.